And we are live. Hello, everybody. Welcome. Thanks for tuning in tonight. Tonight is a financial discussion on so many of the teacher boards and in our IDEA organization. Lots of questions about PPP, making sure that we're handling the budgeting for the fall registration the right way, managing the money that we're taking in now the right way. And I'm excited to bring in, I call him the dance teacher's accountant, practical advisor. His name is Sean Deaver. Welcome, Sean.
Hi, Ree.
Nice to have you with us tonight. Sean, tell our viewers a little bit about yourself. We may be introducing you to some new people.
Yeah. Well, I'm a CPA based here outside of Boston. And my specialty that our firm specializes in doing tax planning, tax preparation, and then payroll and bookkeeping for dance schools, gymnastics schools, and swim schools across the U.S. Currently, we service about 600 dance schools, either in payroll or tax and so on. So myself and especially I lead the firm here when it comes to these industries, and just always happy to help out. And one thing that we've been doing obviously for the last several weeks is guiding our clients and others through this maze of not only PPP and EIDL, but there are obviously other opportunities and so on that are available to folks. And so we're trying to just help wherever we can, with getting folks to get what they're doing and to help them through these tough times.
Awesome. So, Sean, I want to let our viewers know that we will be taking their questions. So please feel free to post your questions. Welcome, everybody. If you just want to let us know where you're from and where you are listening from, that'd be great. But please put some questions in our comment box. Sean, I'm going to start with this one to get us going because I'm seeing it everywhere on the boards, among my IDEA members, etc. Let's say, and I'm somebody who didn't get in until the second round. So let's say I'm a studio owner, and in March or April, beginning of April, when I applied for my PPP loan, and I had a particular faculty in place, but now I'm moving into a new season and that faculty could change.
Sure.
Can I equal the same amount of payroll, but maybe be paying different people, or is that out of the equation here?
Yeah, that's a great question. The main intent of the program was really, if you think about the genesis of this, how this happened, back in the February timeframe, or mid-March, the government came in and basically closed down small businesses across the country. And at that point in time, it threw a bunch of people into the unemployment world. It threw a bunch of people into the, not having work, people having a hard time paying rent or buying groceries or what have you. So what the government's intended to do with this program, and unfortunately it's difficult to sometimes conceptualize because there was a gap between when this happened and then when the money came. Even if you were in the first round, there was still, the earliest you could potentially have gotten this money was second week of, let's say the 5th or 6th of April. And if we had closed down our studios or our businesses in March, it was a few weeks in between. But with that being said, there was the primary intent of this program was to go back and take care of the people that were on your payroll back in that February timeframe when this whole thing came about. Now, in the real world, or in the fantasy world, which is where these things are usually developed, our staff are all full time, our staff all make the same, and and all of our staff want to come back the minute we do this, and obviously that's not the real world. So now that things have changed and things are restarted, there is certainly provisions in the program that you can hire different people if folks don't want to come back. If the business has changed, a lot of the dance schools that we service, and that I've been talking with in the last several weeks, they don't have needs for certain types of instructors that they had before. They're now virtual. They're looking for people who are really good online that may not be good live, or vice versa. Some people moved back home, took different types of jobs. So there's provisions in the actual CARES Act that allows and enables a small business owner to go through and make changes. What you want to be careful of is you first need to go and look at the people who were on your payroll at the beginning. Can you bring those people back? Is it realistic? And if so, that's your first call of action. If you can't for one reason or another, then is when you want to go through and make those changes. You need to make sure. I always try to educate people and say, listen, the intent, now you understand the intent of the program. So do your best to live to the intent. And then if you're going to make a change, I want you to pretend that you're sitting in front of Congress and with one of those little microphones, and you're talking to a panel of people, and you're defending yourself. And as long as it's not, I've put my brother-in-law on the payroll, I put my husband on the payroll, I put my kid on the payroll, I didn't bring these people back because I don't like them. As long as things like that don't come out of your mouth, I think you're in pretty good shape. But you will likely have to defend your actions. So if your action is, listen, we're at a different part of the season. These people, some of the people that were on my payroll before are no longer needed, and they normally aren't needed at this time of year, or I've had to change my business structure. I think those types of comments will go a long way. So just make sure you're comfortable, again, standing in front of a group of peers. You won't have to be, but you will be defending yourself in front of someone. So just make sure your story's pretty airtight is kind of the thought process.
Gotcha. 75% of it has to be used for payroll. What if I go over the 75%? No problem with that, my friend?
No, I know the nice thing about this program, which is why it was so attractive at the beginning, was because if you had used 75% for payroll, then the government was willing to give you a 25%, we'll call it bonus, for you to use on things like rent and utilities and things of that nature. So if you're cutting into your bonus, I don't think they really care. Now, we do have a lot of clients that have unique rent relationships. Maybe they don't have rent, or maybe their rent is a percentage of revenue. So since revenues are down, their rent is down. Some people, we have folks that rent from the YMCA and from Jewish community centers and things of that nature where rent isn't an issue. So in those instances, paying someone more than, you're exceeding that 75% threshold might actually make a little bit of sense.
Okay, we are getting questions, and those of you that would like to submit them, feel free. Here's my first question. This is from Mary Ellen. I've had my SBA number a while ago. They keep emailing me to be patient, and the funds are reserved for me. Does this mean I will definitely get the loan?
So there are two main programs that people are very familiar with that were announced in the CARES Act, or I should say that were highlighted, not announced in the CARES Act. The first one is the PPP. We refer to it as, it's the Payroll Protection Program. The second one is we call it the EIDL loan. It stands for Economic Injury Disaster Loan. The EIDL is actually managed, handled, and communicated through the SBA directly. The PPP, or the Payroll Protection Program, is actually through banks. So if you're getting, based on her question, it sounds like she has an SBA number. That would traditionally mean that she has a idle number, not a PPP number. So in that instance, those are a little bit backed up. The 8-week window that many people are familiar with does not apply with the idle grant. And so my assumption is if you have received communication, you should be okay. There was an announcement made maybe a week or so ago from the SBA directly saying that they're still getting through those applications. But if you had a number that began with a 3 with your SBA loan, that the funding was going to take place. Most people I tell that to, and they say, "Oh, great, I have a 3." It begins with a 3. I haven't found anyone who hasn't had a 3. So it doesn't mean that if you don't have a 3, you're not getting the money. But if you do have a 3, wipe the sweat off your brow. It's just a matter of time.
Okay. We have another question here that I'm going to hang on to and just say this. Sean, can you tell everybody watching that if they're feeling like this is difficult and not making sense, that they're not far off?
Yep. You mean the whole numbers and the loans and so forth?
Yeah, and the confusion and
yeah. Listen, when this first came out, as I mentioned earlier, my firm specializes in these industries. So the minute that this took place, all of my clients were in the same boat. They were all shut down. They're all kid related. Obviously, parents are very concerned with this. I don't have any restaurants or any, grocery stores. I wish I did. I'd be in great shape right now. But so the minute that this CARES Act came out, I literally spent the entire weekend. I read all 800 pages and I knew every detail inside and out. I can tell you honestly with the straight face that even today, we're 4 weeks into this, more than that. We're 4 weeks into, almost 5 weeks into this. I haven't met a banker or another CPA, with the exception of, I can count them on one hand, in the United States that has any idea what the details of these programs. So the bankers are saying, go to your CPAs. The CPAs are saying, go into your bankers. Everybody's going like this. So, and these are folks that do this for a living. So if you have, if you're feeling overwhelmed, if you're feeling, depressed or whatever, don't be. This isn't your fault. This was just, they're still building this airplane as it's racing down the runway. And even today, the final guidance from the SBA has still not been issued, and we're halfway through the program. So I totally understand the confusion and the concern, and everyone is feeling the same way. Here's what I'm going to say at the end of the day. The SBA understands, as does the government, and more importantly, the banks know that this was, I don't want to say poorly put together, because they had to whip it together in a matter of hours, right? It's not like the 2018 tax changes where they had a year to do. This had to be pulled together in a matter of days. So at the end of the day, it was a pretty good program, and it seems to be satisfying what's needed. When you go into as long as you keep the main intention of what the program is intended to do in the back of your mind, and you move in those types of ways, when you go to that meeting in 8 weeks, you go to ask for forgiveness, what banker is going to look at you and say, no, you've made a massive mistake. You didn't do things right. I just can't imagine that taking place. If you're intending to manipulate or game the system, then you're likely in for a tough conversation. But I would say don't worry about it. In large scale, everything's going to be, most things are going to be forgiven, again, unless you're really, really, really trying to game the system. But I understand the feeling of overwhelming. I was overwhelmed at the beginning, more so because of all the phone calls and emails I was getting. It's definitely filtered out now. I understand, more people are understanding the details in the programs, and they are so interrelated that I get the fact of why it's, confusing.
Okay. We have some questions rolling in. Can you see the one on screen right now, Sean, by chance?
Sean, are the allowable expenses that one?
Yes.
Yeah. Are the allowable expenses paid from funds from the PPP tax deductible? Also, what tax reduction strategies do you recommend for your mass clients in or In or line of business, thanks. I'm not
In our line of business.
in our line of business. Okay. Well, let me take the first one there. Are allowable expenses paid from the funds tax deductible? No, they're not. And here, if you think about it, I did a video post yesterday. I'm happy to share with you, but if you think about it, if you were to pay for rent, okay, and in the normal course of normal life, if you were to pay $10,000 for rent, then you're allowed to take that as a tax deduction on your profit and loss statement. However, someone else is paying for that rent. The government is giving you money to do so. So you can't take the deduction if someone else makes the payment. So your profit and loss statement should be fairly much neutral. If you didn't get money for that and you made the rent payment, then of course it's tax deductible. So no on that one. But on the flip side, you're also not recording the loan that you got from the loan money that you're receiving wouldn't be income either. So it's just a wash at the end of the day. In terms of the second half of her question, what type of tax deductions are we offering to our clients in Massachusetts? We have a lot of them. There are a lot of great loopholes in these industries that we spend a lot of time and a lot of money researching and taking advantage of. So it depends on your situation, what type of business type you have, what kind of revenues you have. It would be too generic of a question to me to ask, but there are a lot of really good ones in industries like this.
Awesome. I was approved for the PPP and just got the final paperwork today, but not the money. And then $7,000 from the SBA just popped into my account. Should I decline the PPP then?
So this is a scenario where we're seeing a lot of where you did receive the PPP. Once you sign the documents, the bank has to fund your account within 10 business days. The $7,000 received was the actual EIDL loan, the economic injury disaster loan. So now you have two programs that you've now participated in. And just as a quick, a quick understanding, when you do receive money from two programs, the $7,000 as mentioned, in other words, the EIDL money, will actually be refinanced into the PPP. So now you're only dealing with the bank and it's all under one program. Now the $7,000 will not be it will not be forgiven. It will be a loan that you will have to pay money on or pay interest and make payments over time because you've received money under two programs. If you had just gotten the PPP, that's eligible to be 100% forgiven. If you just got the EIDL, that's eligible to be 100% forgiven. But since you got both, only one of the two is eligible to be forgiven. I don't know how much money this individual received on the triple P. My perspective would be take all the free money you can get. And if at the end of your 8 weeks, if part of it has to be turned into a loan, well, at that point in time, you can make the repayment. There's no penalty or interest for making a prepayment penalty, or there's no prepayment penalty. So you can give the money back at the end of your 8-week window if needed.
Okay, we have a question from Amy. I have such a small payroll. I didn't apply for PPP, only EIDL. Should I also apply for PPP? I did get an email recently from the SBA stating applications would be processed in the order they were received.
Yep. So, at the end of the day, again, the advantage to the PPP is if you use that 75%, then they are willing to give you 25% to help you with operating expenses like rent and, utilities. So without knowing the size of the business and the dollars and so the size of the payroll and so on, it would be difficult for me to say yes or no. But from my perspective, again, free money is free money. Probably makes sense to apply, see if you can get it, and then determine whether the EIDL is the better approach or whether the PPP is the better approach.
Okay, and I think this question, which is from Donna Fresh, may be sort of a repeat. Received the EIDL advance, but the loan is still pending. I then received the total dollars of PPP. Should I give back the EIDL advance?
Yeah, so unfortunately, the idle advance return is difficult to return. Again, what this is going to happen is it's going to be refinanced into your PPP loan. The idle will be refinanced into the PPP loan. And at the end of your 8-week window, when you step up for forgiveness, at that point in time, if you want to give the money back, then feel free. That's obviously something that you can do and negotiate with the bank at that point.
I feel not so smart here. Do you know what UI is?
Unemployment insurance.
Okay, go. Can you help with
The
questions?
answer is yes, I can help with answers with questions about UI, but I'm not sure what the questions are. They'd have to be, I mean, unemployment insurance is obviously, we know a lot of people are filing for unemployment. It's very difficult to get because, I mean, it's not that they're not owed it. It's just that the process. I mean, I have clients I was talking to just today that are in Florida who said their people have been applying for unemployment for 5 weeks and they haven't received a nickel. Maybe it was 6 weeks and they haven't received anything just because of the backlog. So, people that are let go are certainly eligible for it. Contractors, 1099 contractors are eligible for it. Small business owners are eligible for it under pandemic unemployment. So, a lot of people are eligible. If you do get a PPP loan and you bring people back, you do need to educate your folks and let them know they need to stop filing for unemployment if it's their primary source of income. Okay, so typically the way unemployment works is you apply every week. Most states, it's on Sunday. You're applying for the previous week. And at that point in time, you would indicate whether or not you've received money from an employer. So if I make $1,000 a week on unemployment, let's just say hypothetically, and I had 2 jobs, a full-time job and a part-time job as a dance teacher, and I've lost both of those jobs. If my dance employer hires me back, I would still be able to apply for unemployment. I would have to include the amount of money that I make from the dance position, and then that could potentially limit what I receive from unemployment, but I'm still fully eligible for unemployment.
Okay, so for the first time ever, a business owner is eligible for employment, or the first time I've ever known of it.
Yep, exactly. Again, the plans here that were in the stimulus packages, this is stimulus 3 and stimulus 3.5, we refer to it as, they're very favorable. And there's another program they're working on right now called stimulus 4, which has a lot of other opportunities. It's still in rough stages. There's a Democratic and a Republican proposal. They are kind of different, but sadly, they're very heavily focused on I shouldn't say sadly, they're very heavily focused on the individual, giving the individual money, again, more like an unemployment program. I haven't seen any discussion of a PPP or an idle or anything along those lines to help out the employer. So my concern is, in 2 or 3 weeks or a month or so, when this June 30, or actually, I guess in maybe 2 months, when stimulus 3 comes to a close, I'm hopeful that there are other opportunities to re-up, what we do, with the money that we're getting as small business owners. I do know, obviously, there are a lot of small business owners that can open. There's hairdressers and nail shops and dentists and doctors and things of that nature. They can start to reopen. Even movie theaters. You can do these activities, safely with a mask on. The question will be, can we teach, dance lessons with a mask on, or we are comfortable having the kids with masks on? So that will be obviously something we need to face in the coming weeks.
Good question here. I mean, I think I know the answer, but if I'm on the payroll of my company and I'm receiving PPI and I included my payroll check in that, I can't now go for unemployment insurance.
That's right. You can't double dip. You got it. The most important thing to remember with all these programs, because we're talking about PPP and idle, but there were 2 programs before that called the Corona Family First Act, which included paid sick time and family medical. And there are other credits like retention credits and tax deferrals that exist. And in stimulus 4, there might even be more opportunities. The most important, and of course, there's unemployment. So you got to be really careful that you're not double dipping on any of these programs, because that could disallow you from getting credits, and it might actually wind up getting you to a tangled web. I've been advising. I don't want to be too self-serving here. You know, we have a payroll firm, but there are a lot of people that utilize self-service, payroll software. And I won't name any specifically, but there are some out there where owners are responsible for doing their own payroll, and they're using a rental software package to do it. Well, those programs we have already unraveled all sorts of issues with people doing things wrong, taking credits they're not supposed to, not taking credits that they're entitled to. And then, of course, as this whole thing weaves itself out and we get into filing the forms and the 941s, and at the end of the year, the W-2 corrections, all of these things, if you're not using a service, someone who can help guide you, I would certainly suggest doing it. Doesn't have to be ours, of course. I would just, if you're a self-service person, I would really, this is difficult stuff. We have teams of people working through how to do these correctly. I would be very nervous if I was trying to do this on my own, and payroll and accounting were not my major strength. I would even say, we've been speaking with a lot of we have a CPA practice. It's a smaller firm. They service about 40 or so clients who did payroll using a third-party service. They actually called us last Wednesday and handed all of their clients to us, because even them, as a CPA firm, their primary business is being a CPA, not payroll. They were doing it as a service to their client. They handed us all their clients because they were concerned that they might have been missing some things as well. So just be very careful, and something to think about.
Okay, Sean, our next question comes from Jolene. Should I waive the PUA? First, tell our listeners what a PUA against the PPP. Since I do not have W-2 employees, my state is giving me UI, although I am a sole proprietor.
All right. So PUI is pandemic unemployment assistance. So it's basically unemployment insurance on steroids. And the nice thing about it is there's that extra $600 people have heard about that you can get. And, with that being said, you as a sole proprietor or as an independent contractor, you're typically not eligible for unemployment. So pandemic unemployment allows you to do that. With that being said, if the rules came out very specifically that a PPP, if you are not allowed to request PPP on behalf of the contractor. Contractor has to request and apply for that on their own. So in the event that you actually received PPP money and it related to 1099s or contractors, I would actually suggest you refuse that PPP money and send it back, because you're likely going to be facing at the end of your 8-week window some form of, or maybe complete unforgiveness. Because again, at the beginning, the rules were a little unclear and they discussed about potentially having PPP. Now it's clear that it actually went live before the first applications were received, that PPP should not have been requested for independent contractors.
Okay. Thank you, Sean. We have a question from Lindsay. How does taking the PPP affect me tax-wise if I have an S-Corp? I'm reading contradicting information.
The SBA and the Internal Revenue Service are extremely clear on this point, Lindsay. I'm assuming when you say taking the PPP, you're the owner of the business. And they have said 100% from day one, without exception, black and white, zero gray matter, that it is not at all considered taxable income. This is a loan that they are giving to you. And in the event that you use that loan as per their request, 75%, 25% payroll and other expenses, it will not be considered taxable income. So there's nothing to worry about there.
Okay, I have a long question here. I'm going to leave it up for a second. An employee going out on maternity leave at the end of the month, does that make me one less employee on the payroll and count against me?
SBA says I need to keep the same number of employees on the payroll during 8 weeks. will forgiveness be reduced for me with one less employee? Great question there, Donna. And you have a couple of options here. Number one, you can replace that individual if you'd like with a new member. But more importantly, keep always remember that the intent of the program is to pay the people that you have working back in February. I got my money in, I have a few different companies, and one of the businesses that I have, which happens to be a gymnastics school, we got our money in very, very early April. I'm in Massachusetts with Ree. Our businesses are not open at all yet, and we're here at the end. We're here at the beginning of May, so I'm a month in. No one has stepped foot in my building. No one has done an ounce of work for me. I say that, slightly because they are actually doing some home projects. So there's no requirement with the PPP that someone actually physically is teaching classes or doing dance. It's actually expected that for the most part they won't be. So just because this individual is going out on maternity leave doesn't preclude you from actually paying the person. So I'd probably consider continuing to pay them, and then that would then give you the one full-time equivalent request or full-time equivalent credit that you're looking for.
And I could choose, if I wanted to have an employee that replaces that person and use those funds for that, as well as help out the maternity leave employee, correct?
You could. Just keep in mind that with maternity folks that do go out on maternity leave, they're obviously protected under the Family Medical Leave Act. So you just want to make sure that those individuals, you're not, doing anything that gets you in trouble from those particular rules.
Okay, Lindsay had a second question. I have 2 full-time employees and 14 part-time. Do I have to bring all 16 on? Kind of the same question.
Yep.
Or can I bring less as long as the total dollars end up the same?
So the intent here, Lindsay, is you asked for some money at the beginning when you applied for the loan, and you gave them a list of names. I know you really didn't, but they're expecting there's a list of names that goes behind that. So the intent when they gave you this money, they gave you a bag of free dough, is that you take care of all 16 of these individuals. Now, again, as I mentioned very early on, in the event that maybe you have a high school kid who's not going to come back, or you're not interested in bringing back, that can't be very helpful, who works 2 or 3 hours. If you want to take those few hours and divert them, or allocate them to someone else, that shouldn't be an issue. The money is of course important, but the key here is to make sure that you're protecting the people who were working for you back in February or early March when your business was closed down. If you do have business justification, and again, as I said earlier, if you're comfortable standing in front of a room full of people, let's say in front of Congress with a microphone in front of you on the big old spotlight shining on your forehead, as long as you're comfortable explaining to them why one person's not on the list and has been replaced with someone else, then you're fine. I would make sure that the new people don't have the same last name as you or are related to you, because that's where you really can get in trouble.
I don't even know why I'm laughing at that, but it seems that might be an obvious thing to let's keep in mind. I think through all of this, we need to be as honest and as upfront and do this the right way. Do not try to beat the system. I don't recommend that.
Exactly.
So after the 8 weeks, are employees able to reapply for unemployment?
In the event that the 8 weeks is over, and I'm assuming from this request or this question, you're saying after 8 weeks, I'm still not in business, I've maybe closed down my operations. If that's the case, then yes, you're able to furlough them or terminate them or whatever the case may be, and they're eligible for reapplying. Of course, the hope would be that at the end of 8 weeks, we're back in a much better place. We've got some classes going on. Maybe it's lighter classes. Maybe we're entering a summer camp type of program. And in that instance, you wouldn't need to put them on unemployment. But short answer is yes. If you after 8 weeks, you've got no work for them to do, they are eligible to go back on unemployment.
Do you believe, or maybe you're going to say, Ree, I don't want to answer that question. Do you believe there'll be something more in another 8 weeks that will help to keep us going if we find ourselves in the same situation, or are we hanging on in the hopes that it will reopen?
Yeah, it's a great question. At the beginning, several weeks ago when the first CARE Act came out, my thought was, at the end of the day, the government is feeling responsible and rightfully so for putting us all back into a position where we left off back in February. Now, the problem is they're looking at now they have to find the best way to do that. Is that through payroll? Is that through unemployment? Is that through additional stimulus checks? Is that through rent and mortgage forgiveness? What is it? Is it food coupons? Who knows? I think the key will be as governors and states and the federal government start to release or start to ease restrictions on the different states. We start to see employers open up, restaurants open up, shopping open up. Again, there's a lot of things you can do. If you think, I try to spend a lot of time thinking about, if tomorrow the world reopened, what would we not be able to reopen? I can shop with a mask on. I can go to a dental appointment and for a few minutes, my dentist and my hygienist will have a mask on. I may not. I can go to a movie with a mask on. I can go to a restaurant and be spaced out and with a mask on. So there's not a lot that I can't do. I think sadly, I think I could take a dance class with a mask on if I'm spaced out. I think about things like daycare, summer camp, sadly the NFL. Those are things that you can't do with a mask on. So I think it'll be important to see what industries open and what industries they're willing to let open. And that'll determine if we've got a whole bunch of businesses that still can't function. Then I think additional lending has to be sent through. It'll just be a matter of, do I want to do it through the employer and through payroll or payroll credits, or do I want to do it through perhaps additional stimulus checks? So I wish I had the crystal ball. I left it at home. But at the end of the day, I think, it'll just be interesting to see how it plays out. I'm hopeful that there are additional programs for us as owners.
Okay. I am an LLC and have no other employees. I received a $1,000 loan, I guess, from the SBA. Can I still apply for PUA?
Yeah, so that would have been the $1,000 EIDL loan that they got. They would have to use that money up first, and it would have to be used on his or her payroll first, and then they can apply for pandemic unemployment.
Okay, so this is a question. Can you see this question?
Yeah. What if I decide not to use the PPP for payroll? Since I really do not have work for the next 8 weeks for teachers, I'd rather use the money towards rent and updates to facilities to safely come back. Would I just have to pay the money back with a 1% interest? And Wendy's actually a client of mine, so great question, Wendy. And it's kind of right now, I will tell you this. If you got PPP, in your loan documents, you signed a statement that said you will not spend this money on anything other than PPP or payroll or qualified expenses, which include rent and utilities. And if you do, it's considered fraud. So many of you might have heard that yesterday was the first time the actual IRS, Secret Service, and the Treasury Department arrested 2 individuals, one in Mass, one in Rhode Island, for actually fraudulently putting something up against the PPP program. But with that being said, at this stage, we're advising our clients not to spend it on anything other than that because of the fraud comment. Now, what we don't know yet, and we'll have to unfortunately wait a few weeks to see when the banks start looking at forgiveness, is, well, if I get to the end of my 8 weeks, can I just keep it and turn it into 1% loan? At this stage, the writing, the questions and answers are all steering us towards no, because you shouldn't have applied for the PPP program if you didn't intend to use it for payroll and rent and utilities. I think, again, I would go back to, just kind of, I'll use the word common sense, where if I had received $100,000 and I spent, 90 of it on rent and utilities and payroll in the correct way, I think the bank turning to me and giving me the final 10 as a loan and so on, I think is probably going to be okay. But if I got 100 grand and I shoved it into a bank account someplace and I didn't spend any of it, and I have nothing to support myself for forgiveness, I think at that point in time is where you might be actually have some risk and may get yourself in a little bit of trouble.
We have another question that I have up, but there's a question that's gone by a couple times and I haven't been able to grab it. If I applied for PPP the first round, but now have been accepted in the second round or approved in the second round, I can't use, well, you tell me if this is true. Can I use that money to pay that past payroll, or must I pay payroll from this point forward?
Yeah, so that's actually sadly one of the open question and answers that we have with the SBA. I will tell you this, that the words, the way they're written today, use the word and rather than or. And what I mean by that is your pay period and your payday need to be in that 8-week window, as opposed to your pay period or the payday. So a great example would be, someone who got money today on May 6th, they may have a payroll coming up on Friday, which is May 8th. So the question would be, the payday is May 8th, but it applies to perhaps days or hours worked, maybe 2 weeks ago or maybe in the month of April. So the question is, can I use that payment for my PPP forgiveness? Today, the way the guidance is written, is the answer would be no, because the pay period and the payday need to fit within your 8-week window. But we are expecting them to opine on that. What we're suggesting to our clients that use our payroll service is at the end of your 8-week window, make sure you keep an eye on your dates. And if we need to cut a pay period short, if we need to cut a payday short, we'll do that just so that we can squeeze in whatever we can squeeze in into that 8-week window.
Okay. We're going to take a couple more. You know that the questions are being fired at us right now, but
no worries.
This one from Debbie. One of my employees has not received her stimulus check. She was told her social security number and address don't match, although she filed her taxes paying federal and receiving a refund from the state with the same information. What steps do you suggest that she could take?
I'm assuming when she says she was told her social security and address don't match, that she's referring to the IRS website. In that case, I wouldn't worry. The IRS website has been nothing but tragic failure. Everyone, even my, I can't seem to, I go out there, sadly, as an accountant.
We could get in trouble for saying that. Go ahead.
No, I'm willing to tell them to their face, because all my clients call me with the same thing. Sean, you messed up my taxes. You must have fat fingered my social security number. No, everything's just, you can't even file a tax return today with the wrong social and name on it. So I wouldn't worry about it. Those stimulus checks are coming. Some of them will take up to 4 months for you to receive. So tell her to be patient. I'm sure if she received the tax file, was filing, and she's eligible, then I'm sure she could still get that $1,200.
Okay, and we both know Terry. She has a question. What about paying our tax estimates for the 2020 year now that our income is not what we base those estimates on? How should we proceed?
Yep, great question. Terry's a great client of ours, and I'm glad she's asking. Hopefully she got her newsletter on how to handle this. So a couple things. The first and foremost is, for those of you that are business owners, you know that your quarterly estimates are due in April 15th, and then your second one is due in June 15th. Both of those, as well as your actual tax liability, were moved to July 15th. So you do have to make sure your returns are filed and your payments are made by July 15th, but your estimates have been moved. Now, estimates are only that, they're estimates. As accountants, we prepare these based on the prior year data. So your 2020 estimates are made under the assumption that your business will be exactly the same as 2019. Clearly, I shouldn't say clearly, but in most instances, the businesses are not doing as well. So then in that case, you can skip the estimate completely. You can short pay it if you want. What we're advising to many of our clients is if your revenues are down sharply, maybe you skip the payment. And then Q2, Q3, we look at the numbers again to see where we're at and adjust accordingly. But they are estimates. I would heavily, first of all, don't send anything in early before it's due. But then certainly in that July timeframe, it's a great opportunity to get together with your CPA and ask or revise the numbers and so on. And with that, Rhea, I do want to make one comment. You and I spoke about this before we began. I mentioned to you that my firm services heavily in the child athletic, child sport, child activity world. Gymnastics, swimming, dance are our three largest industries, and we service well over 1,000 clients over the U.S. And I just want to say how impressed I've been, and I'll even say shocked with the dance community and how wonderful they've been handling this. Most of my other industries are completely closed down, if not 100%. Call it 90%. And in the dance world, I'm finding exactly the opposite. I've had every day I've been having phone calls with, I'm arranging about 10 or 12 calls a day, consultative calls. And I have just been blown away at how many dance schools have been able to literally spin, pivot immediately and turn into the online curriculums and online dance classes. And some people are telling me that their revenues are equal to what they were pre-pandemic. So, take your hats off, pat your own selves on your own backs. I mean, it is really, really, truly amazing at how well you're doing. You're certainly doing better than the schools out there because they can't figure out this online thing to save their lives. So keep up the great work. Continue with your creativity. I envision summer. We do a lot of work with some camps, and for those of you that aren't aware, the only way a camp survives is by them getting this money months in advance, because they spend around 40% of what they make prior to camp opening. So parents are, they're being very gun shy right now with spending this money because they're not sure if camps are going to take place. If they don't, you could be in a very, very well-positioned place to hop right in there, offer alternatives, offer on-site, if they don't open, but the states are allowing you to do something, but in limited numbers, this could be a great opportunity for those that have, I'll say, less robust summer programs to do pretty well. So again, my hat's off to all of you.
I want to say, hang on, I'm going to bring this question back in a second. I am amazed myself, Sean. I feel like our industry, there are some people who turned over their businesses in one weekend. There are teachers who started, I consider our start date, at least in the New England area, to have been March 13th, which happened to be Friday the 13th. And they've been going all day, every day since. And frankly, one of the reasons I wanted to do this episode tonight was because the loan situation and the government telling us we would be okay if we continued and kept our employees on. The last few weeks have been a roller coaster ride because a lot of people made their plans to keep their schools open based on these loans, and the fear of not getting them was a tough journey.
Correct.
Final words. Well, wait, I'm going to put you on the spot. We had so many questions tonight. Can I get you back in a week or two?
Yeah.
To do exactly the same thing? And you had to say yes, because we have right now 113 people watching.
There you go.
Sean, you're awesome at what you do. You can explain it so that our dance community understands it, and know how much we appreciate you.
My pleasure. And, in the meantime, feel free to share my contact info with folks. I'm just glad that, our firm's able to help, and myself as well. And, again, it's important for us that these industries continue. I think everyone's doing a great job during these crazy times. And as more things come out, please know I'd love to help share that information with your community as well.
Awesome. Thank you to all of our viewers. Thanks for tuning in tonight. Honestly, I thought a financial talk was going to be boring, but this was one of our most well-attended talks. So let's talk numbers some more. The world is changing, isn't it?
That it is.
Thank you, Sean. Thank you, everybody, for tuning in. Have a good night.